just given how volatility's come back, this Fed repricing has gone a lot more aggressive. How are you advising your clients right now about what to do in these markets?
Yeah, I think we've been also always advising our client to stay diversified. So diversification is the key. And actually, I have seen also the sentiment have improved since the beginning of this year, turned more positive, especially with the China reopening. And so more receptive to look at diversification, further asset allocation as well.
If I see cash is yielding me some 5%, and maybe more than what stocks and bonds can give me at the moment, like, is that deterring a lot of your clients from really kind of taking on risk this year?
As I said, the sentiment has improved, and I think one asset classes that has been also getting traction is alternative, like the private market and also the hedge fund. Because if you look at last year, one or few asset classes have been performing is the alternative and the commodity. And so I think we have also been advising our client to look at endowment style kind of investing, proper asset allocation to different asset classes, and alternative. I've been seeing good traction. As a matter of fact, we've been also doing survey with the client, especially with the global family offices. And they also have been telling us that they will be increasing allocation to the alternative space. And right now, another very hot topic is ESG, sustainable investing. And we have also seen increasing traction on this space as well, especially among younger generation as well as women.
Interesting. And during COVID years, there was an increasing amount of mainland money that was heading to or being booked in Singapore. Now that the China reopening story is kind of getting traction, do you see that trend reversing in any way?
I think China, for Hong Kong, for both Hong Kong and Singapore are the important hubs in Asia, and also for UBS as well. And I think both of them has their competitive advantage. But certainly, I think for Hong Kong, especially with the Greater Bay Area, there's a lot of potential. And so, the Greater Bay Area, we're talking about the 11 city, 87 million population. It's a huge market, as well as a 1.7 trillion GDP. So we've been seeing also money coming in to Hong Kong, and also looking at setting up family offices in Hong Kong. I just came back from Middle East, and a lot of collaboration opportunity between the two regions, Asia and also Middle East.
What are you doing in terms of staffing at the moment? Is it more about bringing up or lifting up desks in Greater China? Is it still about relocating staff from Singapore to Hong Kong?
Certainly. Asia and Hong Kong is the growth region and also the growth driver here. So we continue to hire in these two regions, as well as developing young talent as well. So we also spend a lot of time in developing and grooming young talent. And I think we also have seen requests to relocate back to Hong Kong. I think that's a good sign.
Oh, certainly.
Especially with all the travel restriction lifted, and also the opportunity lie ahead here.
Yeah, so have you seen a lot of mainlanders coming to Hong Kong to open accounts? And would that mean increasing staff here in Hong Kong too?
Yeah. Certainly. I'm so excited to see the return of the normal business activity. So I tell you, lately I've been really busy meeting up with clients, be it from mainland, from different parts of the world, because they haven't been traveling here for a few years. I think that's good. And by the way, I also very much look forward to the Art Basel. We'll be hosting the Art Basel in 2 weeks. That's also one of the blockbuster events in Hong Kong. So yes, certainly we are also looking at and selectively hiring in this region. And as a matter of fact, even last year we've been hiring.
Onshore wealth business, how profitable is it? And when do you think you could hit profitability?
Onshore China is also a very important market for us because if you look at the kind of wealth, 1/6 are sitting offshore. Bulk of it is still onshore. So that's a very important growth market for us. And actually, we are also very excited because we just launched the digital wealth management in Shenzhen. And that's the first digital-led wealth management platform by a global wealth manager in China, the first one. And that will allow us to onboard clients in 7 minutes.
Wow.
Yeah. And that, because I think China is such a huge market, you cannot really tap it with your traditional platform or solutions or offering. Digital has to be part of the game, or even a very important part. So we are very hopeful, and we are excited about the launch here.
We've seen a lot of headlines crossing from the MPC, whether it's a conservative growth target. It seems like there's a lot of emphasis on reining in financial risk and this revamp of the state apparatus. How do you approach these sort of changes? Is this a good thing overall?
Oh, it's good. If you look at the GDP growth target of 5%, as a matter of fact, with the MPC, we revised our GDP forecast to 5.4%.
Yeah.
That's positive. And so, as I said, China reopening will be the key growth driver. And that's positive. And what we've been saying yesterday, there's also the announcement about the regulatory reform. It's on the right direction, and we are positive, because what we are looking at is also more streamlined kind of function, more efficiency, collaboration among the different kind of unit. So that's positive. So certainly, China continue to be one of our key growth markets. As a matter of fact, again, because as the chair for the Hong Kong Private Wealth Management Association, we did the survey.
Yeah.
If among all the wealth management players, bulk of majority said China is the #1 growth market.